We sat down when I took over the fund in 2017 and we did a lot of analysis of the equity income peer group, the holdings, this sort of structure of whether it be FTSE 100 mega cap, mid caps, and it became very clear to us that a lot of our peers were doing similar things and owned similar names. So when we had a look at our strategy, we decided to focus on a different angle and create a product that was slightly unique in the market. Firstly, we concentrated the portfolio down. I think it was around about 45, 50 names when I took it over. It's now about 35 today. It was very FTSE 100 heavy, and I say top end of the FTSE 100, income names, oil and gas, bank, stocks, utilities. Today we own less than 1% in oil and gas. We own no banks and we have one utility. So I think from that perspective, we've differentiated the strategy. We've also added some pure growth technology names, which are zero yielding, again, which is slightly different, Just Eat Takeaway, ASOS, and more recently we've added Amadeus, a European name, and the Hut Group. So we feel as a whole we've delivered a product that looks a little different, certainly is different in terms of structure, but within that has still managed to maintain the above 6% dividend yield that you get today. I think it's pretty clear that the current coronavirus situation is the challenge that faces us all today. I don't think that's specific to the UK. I think regionally there have been huge disparities of those that have dealt with this better than others. But from my perspective, the challenge is the same as ever. It's focusing on business models, focusing on competitive advantages, businesses that have very strong balance sheets, recurring revenues, and in a period where earnings are particularly volatile, depending on the sector you're in. This is about focusing on those companies that structurally, I feel, will come out of the other side in a stronger position. I think when you look at bigger picture at the moment, I mean, clearly the UK has had a leadership change in terms of Boris Johnson. We've been dealing with Brexit. I think the UK is still unloved by asset allocators, but from my perspective, that's the opportunity, because when people are not looking at markets, there is value on offer. And I think we've been talking a lot about growth and value for some time now, and the UK really should be a beneficiary when that market rotates, which it currently is. The current volatility has given us an opportunity to add several new names to the portfolio. We've added a couple of European names, Richemont, hard luxury goods provider that owns Cartier, Van Cleef & Arpels in jewellery. They own Panerai and IWC watches, a beneficiary of global travel, especially the Chinese that we hope will return. We've added Amadeus, which sells software into the aviation sector, another name that has been hit hard as travelling has reduced significantly during the pandemic, but we felt, having halved or nearly halved in price, that this was a good opportunity to introduce the name. And more recently at IPO, we added the Hut Group, which is a D2C or direct to consumer, predominantly online seller across 3 divisions. Beauty, which is particularly their Look Fantastic online portal. They have a nutrition brand, My Protein, and they have a third division, Ingenuity, which sells an end-to-end solution to brands that are looking to sell the products directly to consumers. This is a purpose-built solution, and it's attracted exceptionally big brands, including Nestle and Coke. I've always had particularly strong views about certain sectors, and that's probably driven by where I feel I have an informational advantage. I think you've alluded to the fact that I don't own any high street banks, I don't own any oil and gas, I don't own high street retail. Some of this is a function of structural shifts that are ongoing. Some of this is about the competitive advantages of the business models. I mean, if you take banks, for example, returns have been eroded by higher capital buffers. There's been an increased regulatory burden since the financial crisis. Parts of the business models are being attacked by a number of the new digital players, and I think they become very political, which we've seen with the regulator making them cut dividends in and during the recent pandemic. I mean, in retail, again, there are huge structural shifts going on, and I think it's very difficult to fight that trend at the moment. I own ASOS. I think digital is the way to go. I think that's where the consumer is going. I think these businesses, in the main, are struggling to adapt their bricks and mortar footprint. And I think over the last 12 months, the pandemic has reinforced these business models as more and more consumers shift online and have got very comfortable with the business models. I think the simple answer to that question is yes. This has been an unprecedented time for families and businesses globally, and it's an environment and a market that I hope I never have to deal with again. But I think coming out of this, we've seen an unbelievable response from government, from the pharma sector to get a vaccine in a very, very short period of time. As we stand today, we have had 3 announcements in the last few weeks. We potentially will get more over the coming months, which certainly makes the outlook much clearer. I think we've gone from a scenario of if to when. There is still a question for me over timing and when we can get mass vaccinations to the market. I guess we're also dealing with a current wave of lockdowns across Europe and the US, which is escalating. And as ever, from a market perspective, there will be winners and losers from this crisis. I think what's difficult to answer today is what is the new normal? So what is permanently changed in the way people think, whether we work from home, how we shop, how we commute, and what will come back stronger or better than it was before. I'm trying to pick my way through that at the moment, and hopefully I have a portfolio that will benefit from a number of those trends in the future.